In this video, I'm going to show you how you can retire sooner even with a smaller portfolio. I'm going to show you how even with a small portfolio, you can generate substantial income that will allow you to reach your retirement goal sooner than you probably thought possible. So if you're frustrated with the mainstream media saying you need millions of dollars to retire comfortably, I'm here to show you how you can retire with a lot less than millions of dollars. One of the reasons why I decided to do this video is that some of you actually, you hate your job. You don't want to be there. You want to retire. You want to quit. You want to do things that you want to do, not be forced to be somewhere that you really don't enjoy being. So let's forget about how the world normally works. Let's push aside that whole working a job that you hate working. Let's see how we can make our world better, how we can switch it over to a better story, to a better life, to a better situation where you can retire sooner than you probably thought possible. Now, a brief story about me. That's the situation I found myself in many years ago. As a young man, I was taught a business from another business owner with the agreement I would pay him royalties or commissions for the first 5 years. Unfortunately for me, when that 5 years came up, he decided it would go on indefinitely. So I was stuck in a situation where I'd be paying someone indefinitely. And that's not what I wanted to do. I wanted to be an entrepreneur. I wanted to own my own business. I wanted my freedom. So at that point, I decided I wasn't going to work for him the rest of my life. That's what pushed me to begin investing in real estate as well as stocks and options. Fast forward many years, and we are where we are today. I was able to use investing and trading strategies like selling options to generate substantial income, which I still do. And I'm going to show you how you can do it also. The goal of this video is to show you how you can generate substantial income even with a small portfolio. In this case, a $250,000 portfolio. Now I have two portfolios I share with my Patreons. One is a lot larger portfolio, but my smaller portfolio is only about $50,000. I'm going to share my smaller portfolio with you. It's worth about $50,000. So if you take that $50,000 portfolio times 5, well, that gives you a portfolio of about $250,000. I'm going to show you the trades I did a month ago, as well as cash flow I've received over the past several months. I'm then going to show you the few trades we do every month, which helps you to realize that it really doesn't take that much effort and that much time to trade a portfolio like this. That will help you determine if this is a strategy you want to look further into, which might enable you to retire sooner rather than later. If you're new to this channel, you may not know this, but I like things as simple as possible. Life can be complicated enough. So this strategy is actually a very simple strategy. It's one that if you spend some time learning, I feel confident you can trade it successfully. And just so you know up front, you're gonna see that on average, I generally collect around $400 to $500 a month in this account. But really, even though it's a $50,000 account, I'm trading it like it's a lot smaller account. You see, I keep extra cash in this account just in case some awesome opportunity were to pop up. So the thinking here is that if I can make about $400 to $500 a month trading this strategy with a $50,000 account, if I bump the account size up to $250,000, I'll be making about $2,500 a month in this account. Well, if you're ready, let's get into it. So here you see an Excel spreadsheet of my cash flow in this small $50,000 account back in the month of November. There's a couple things I want to point out to you here. First, we have this monthly cash flow column. This $476 is how much net cash I put into my pocket in the month of December as a result of selling options. And here you see the trades that I did. And the month of November was a little bit busier than normal, but it wasn't overwhelming when it comes to the number of trades. I just thought I'd talk you through the trades so you can kind of get an idea of what it might take to trade a $250,000 account. So you see that towards the beginning of November, I did a bullish put credit spread in realty income. I sold the 55 put, and I bought the 40 put for protection. We got a nice credit when we did that. Then you see a GIS position here. This is actually one that went against us. When you trade with the strategy I trade though, it's not that big of a deal. So I sold the November 15th $70 put option. Well, GIS has experienced a pretty sharp decline, and so that put option was assigned to me. As a result, I bought 100 shares of GIS at $70 per share. Immediately the next day, I turned that into a cover call. I did that by selling the January 17th $70 cover call option. As you see, we got $59.47 for that call option. It also lines us up to receive any dividends while we own these 100 shares of GIS. Now scrolling on down here, you see a PayPal trade I did. I sold the $77.50 put option, and I bought the 65 put option for protection. So we truly only had at risk $1,250 if everything went wrong with this position. As a result, you see here, we received a nice credit of over $100 net when you figure the option I sold and the one that I bought for protection. This next position here, IWM, it was actually closing out an option that expired the next month. We had received a nice credit when we entered it, and here you see we closed it out. And it cost us right around $30 to close this out. The next one you see here was in KR, which is a grocery store company, the Kroger company. It was a $55 cover call option that we're in. This option was called away from us, so we had to keep all the option premium from that cover call option, and we sold the stock where we had bought it at that $55 per share months before. That ended up being a really nice trade for us. Now I'll scroll down here. You'll see the last few trades we did in the month of November. And here you see a new bullish put credit spread we did in IWM. We sold the January 221 put and bought the 220 put for protection. And again, we received a nice credit overall for this position. Then here's another cover call in EVRG, as you see here in yellow. The $57.50 cover call option was assigned, so we sold the stock at the same price we bought it at, got to keep all the option premium and whatever dividends we might receive during the time that we own the stock. And finally, here you see the last few trades we did in this account. We did a bullish put credit spread on eBay. We sold the January 17th 60 put and bought the 47.5 put for protection. So we truly had at risk a total of $1,250 for this position. And you see we received about $55 total for that. Moving on to this light green covered call you see here, we already own some shares of MPW, so we sold the January 17th 550 call option. For that, we received about $37 total. And then two final trades, we're just closing out positions that have received their profit potential, at least 80% profit. We bought the CSX December 20th, $32.50 put options back and it cost us $10. Then we bought to close the Verizon December 20th 40 put option. So that's the trades we did in November. And as you can see, as a result of that, we received a net cash inflow of $476. So if you look at these expiration dates, we're generally selling options that expire in about 30 to 60 days. Whether it's cash secure put options or cover calls, that's generally a time frame I like to sell those options that expire in about a month or two. And generally I'm selling my put options at strike prices I'd feel comfortable if the put option was assigned to me. When it comes to a cover call, I'm selling them usually at the strike price that I bought the stock at. So I'm able to walk away with a net zero win or loss on the stock. Now in some instances where I think the stock is very bullish, I'll sell a cover call option higher than where I bought the stock at. That gives me the benefit of collecting that option premium, any dividends I might be due, but also to benefit from stock price appreciation if the stock were to go up in price. Now some people ask, Randy, what do you do for your extra cash? Well, I park it in this ETF right here. It's SGOV. It pays us nice premium and it's a very stable ETF to park your cash in. Just so you know, all the trades I do in the small account, as well as my large account and my 10% outright stock ownership account where I just buy stocks and plan to hold them until they become overvalued, all those trades I share with my Patreons. And here you see an example of one of the trades. We bought to close this BMO November 15th, $85 cash secure put option for 10 cents per share. It's a trade that worked out our way. So as soon as I know when these trades go through, I post it on Patreon. So if you decide you want to try this strategy, or maybe you're already doing this strategy, this might be a way to give you some ideas on possible trades. I share my trades and I don't encourage anyone to trade them blindly, but it might give you some ideas on possible trades you might consider. You can see the trades I did and then do your own research to make sure it works for you. Make sure you feel good about the company, make sure you feel good about the valuation of the company, the risk and the return, and everything you need to do to make sure that it's an appropriate trade for you. Please don't just take my word for it. So I showed you the details from November, but let me show you several months. I don't just want to give you 1 month. I want you to see what the cash flow is over a long period of time. So I'm going to scroll back here. Now we're back into the October trades. And as you see, as I scroll up, see our cash flow for that month was around $407. Remember, this is a $50,000 account. So if you're trading with a $250,000 account, we'd multiply that times about 5. That should give you about what I would have collected with the same trades, the same portfolio, but 5 times this $50,000 size account. I'll scroll up here and give you a few more months here. You see back in September, we put a net of $455 cash into our pocket. I'll scroll one more month here, and I want to share this one with you because it was a lower month. You don't always have these big winning months. But here you see that back in August, we collected a net of $204 in this account. And I'll share one more with you. It's back here in July, the month before that. Notice we're over 500. We're at $539. As you can see, we're collecting around that $400 to $500 a month cash flow. So if you multiply that times 5, well, it means I would have collected around $2,000 to $2,500 if this account size was $250,000. And just so you have the whole picture, I want to show you what was going on in the overall market during this time frame I just showed you. I'm going to zoom in here so you can see the exact time frame. So the time frame I showed you was from July all the way through the end of November. And notice what happened during that time frame. We had some really big ups and downs in the S&P 500. Overall, we were up, but it was a pretty big roller coaster ride. If you're riding a roller coaster, this would be pretty thrilling. So overall, it wasn't some smooth sailing, just straight up market. We were in a roller coaster ride market. So just know this strategy, it can be used in really any type of market. Now I want to share one more time frame with you. The strategy I'm sharing with you, it's ideal for a bullish or neutral market. However, what happens in a bear market? So I've gone back to the most recent prolonged bear market back in 2022. I think we'll all agree that 2022 was a pretty good bear market when it comes to the S&P 500. The market was down around 20% from the beginning of January to the end of December. Well, how did my little $50,000 account perform during that time? About the same. You see, January had a cash flow of $462. Scrolling down to February, You see that month we had a cash flow of about $573. In March it was $464. In April $458. And one more in May was $437. So overall nice cash flow even in a bear market. And just keep in mind what I told you earlier, I'm not using all of my cash right now in my small account. I'm keeping several thousands of dollars set aside for opportunities in case the market were to experience a sharp decline. So the point is this strategy performs well in all types of markets, bullish, bearish, and even neutral. Just keep in mind that in a bearish market, some of the stocks you own, they might go down, but you'll still be collecting dividends and still selling covered calls against the stocks that you own. It's just the value of those stocks, they might have gone down some. So you're waiting on them to recover. But overall, in my opinion, it's a good strategy for all types of markets. Now, some of you might be thinking, that all looks pretty interesting, but what about portfolio growth? Now, you could just keep some of your cash in that account and let it grow that way. But another way that I like to grow my account is by buying stock that I believe are undervalued outright. And so I have a whole nother account set aside just for that I share with my patrons. It's called my outright stock ownership account, or I call it my 10% account. It's the account where I take at least 10% of the cash flow I make each month in my larger account, and I buy stocks that I believe are undervalued in that account. That lets me have a portfolio that's growing in value over the long term, but I'm still able to generate nice, consistent cash flow by selling options against stocks. But what stocks might that be? Well, it leads me to my next point, and that's that you want to manage your risk. You want to control your risk. So how can you control your risk? Well, there's a lot of ways you can control your risk, but one way I like to do it is to try and trade in companies I believe are fairly valued, or even better, undervalued. So I like to trade in companies that I believe are undervalued. That way, if they return to their normal value, then the stock price should go up over time. That's why every weekend I research the over 250 stocks that I track and follow that I'm willing to buy outright or trade options in. I'm looking for companies I believe are fairly valued, or even better, those that are undervalued. And those are the companies I tend to like to sell options in. And see, if a company is undervalued, then my thinking is as long as I have that right, then at some point the market value will return and those stock prices will go up. And that's compared to trading companies that are very overvalued. Well, in my opinion, if you're trading in very overvalued companies, you just want to be careful because at some point, the market most likely will realize that they're still overvalued and it might come down in price. So one way that I manage risk is just to trade in companies I believe are either undervalued or fairly valued. I tend to avoid those overvalued companies. Another question I get asked is, Randy, should I trade in ETFs or should I trade in individual stocks or a combination of the two? Personally, I like to trade in a combination of the two. In my opinion, most of the indexes right now are overvalued. So as I do trade in some ETFs, like you see here with IWM, I am cautious when I trade in them, and I always have some protection, as you see here. But overall, I like to trade individual stocks. I like to pick companies I believe are undervalued or fairly valued to trade in. I think a nice mix is probably the way to go. But there are a couple of important factors you have to decide for yourself when it comes to answering that question, whether you trade in ETFs or stocks. When it comes to easy diversification, especially for a smaller account, well, ETFs will allow you to do that pretty easily. You have ETFs like QQQ, SPY, and IWM. These ETFs allow you to put a little bit of money in a whole bunch of companies. That lets you be diversified, and I do like that. So if you want to make it even simpler, you could trade just one or two ETFs, and preferably ETFs that give you a wide range of diversification. However, if you want to do a little more work, I like spreading my money around, and I like putting it in companies that I believe are currently undervalued. That's especially the case when I believe the market is very overvalued. If all this seems kind of overwhelming to you, don't worry about it. I have a beginner video I'll share with you at the end of this video. It'll help you to see where you can start when it comes to option trading. It'll teach you all the basics of option trading. It'll help you get started in your journey of collecting this nice monthly cash flow return you can generate by trading a similar strategy to what I trade. And here's proof of that. Here's a comment I was sent by a patron who joined me several months ago. As you can see, he'd been trying to trade this strategy and it just hadn't worked out like he had planned. And so we found each other probably here on YouTube, and the rest is history. And I have many stories just like this. Be looking out for similar posts like this on my community tab on YouTube, because I want you to know that you're not alone. There are other people who are trying to learn this strategy, and that's what we're here for, to help you learn a strategy you can use to retire sooner than you thought possible. I was there at one time, so I know how it feels. If you'd like to join us, please check out my Patreon group. What are your experiences when it comes to selling options? Has it been good for you? Has it been bad for you? Please share your story here in the comment section below. If you'd like to get an alert whenever I buy stock and sell options, check out the benefits of becoming a patron down at the link in the description below. If you're brand new to option trading, I have the perfect video for you. In the video at the link above and the description below, I show you all the basics of option trading. I then have a link to send you to the next video series to help you learn how to begin using that knowledge to trade options and consistently generate nice cash flow in return. So if you'd like to check it out, click the link above or in the description below to the video entitled The Only Option Trading Video You Should Watch, Full Beginner Course. Until next time, Happy investing, and we'll see you again soon.